So I guess we'll jump straight into it. Given you're the Australian equities portfolio manager, we'll start there. From an Australian equities perspective, how would you describe the environment we're currently investing in at the moment?
It's certainly been a challenging environment for our market. We've just been through a 3-year period of flat profit growth for the overall market as a whole, and this has been driven by the two largest sectors in our market, which are the banks and resources, which account for more than half of the market cap on the ASX. And what we've seen over the last 3 years is steady earnings growth from the major banks, which is being offset by a persistent earnings downgrade cycle in the resources sector, which has been driven by lower commodity prices. So the net impact has been more or less a flat outcome from a growth perspective for the market. At the same time, we went through a very sharp rate hiking cycle from the RBA, which added additional pressure on consumers, which also hasn't had a positive impact on demand. But we have seen a reversal of this trend quite sharply since October last year, where we've seen material earnings upgrades in the resources sector, which has lifted the EPS growth profile of the overall market from about 4% growth to 13% growth, which is pretty impressive. But this has been primarily driven by commodity prices, and particularly focused on base metals, precious metals like gold, copper, lithium. The bulks like iron ore haven't participated in that rally to the same extent. So it has been very concentrated. And not surprisingly, the returns from the resources sector have been driving the market higher of late as well because of that. In fact, looking at the returns over the last 6 months, resources have gained over 40% in that period, whilst the rest of the market is at -1%. So it hasn't really been driven by fundamentals across the market. EPS revisions, aside from resources, have been lagging, and most of the sectors have been getting earnings downgrades over the same time frame, where resources have been getting upgrades. So what we actually really need to see is a broadening of growth expectations in the industrials universe to gain a bit more confidence in the sustainability of this earnings recovery at the moment on the ASX.